Hello traders, Gary Wagner here, approximately 12:15 in Honolulu, Hawaii. It is Thursday, the 21st day of July, and this is the daily report for silver. We do have silver along with the precious metals complex trading under pressure today, currently trading down about 80 cents on the day, trading roughly at 39.32, 39.33. I want to start our report this morning by looking at a very short-term chart. That would be our 15-minute chart, and we can quite clearly see that the market did in fact find some strong resistance up in this area. You can see this set of double tops here, and then you can see this again, this top here at 39. As the market came down, though, we can see quite eloquently that we've received some very, very strong support. Now, on the Henkin candles, as you can see, when this market came down, it formed a base, and this, of course, is that 38% level at 38.89, so just below $39. It is now trading well above that, as I say, at 39.31. In terms of on a very short-term basis, of course, the market moved up a little bit. It found resistance 39.40 and then came back down. But you can see right in here, we did get a series of lows and then higher lows. The Henkins have gone and turned green again. MACD is still in a bullish mode. But once again, traders, this is a look at a very short-term chart. If we move that to a different time sequence, meaning the 60-minute chart, we get that same bottom activity that you can see right in here where we did get that double bottom, and we are also green, but we have very, very small body sizes right in here. There's no strength right now to this uptrend vis-a-vis our hourly chart. We are looking at a 720-minute chart. This isn't straight candlestick format. I will convert it into a Henkin chart or an average chart in a second. But as you can see, this market, very, very similar to what I'm seeing in gold, is also trading with a series of lows that are higher, and you can either work from that angle, that's a little bit too steep, but you can see that, and a series of highs that are lower. And of course, when you get that kind of activity, meaning you get the pennant formation, what I believe is quite possible is that what we're noticing right now is a consolidation. It is the market itself forming a base. And typically what happens in a market that's in a typical pennant formation is it will break out to the side of the prevailing trend. This trend, I believe, prevailing trend has been up. However, what I have noticed in silver, along with gold, is you get these long periods of sideways activity. And what I believe this is that fundamentally there is a lot of news in the marketplace that is uncertain. And there is a lot of news in the marketplace that traders are waiting to see the resolve or the outcome of. One is the debt crisis in the U.S. Now, the moves that we have seen recently down have been that knee-jerk reaction based upon the fact that there is some sort of compromise in the works. Also, over in Europe, there are meetings going on right now which are signaling some sort of resolvement in the issue. But here's the thing. My belief personally is that it is a knee-jerk reaction because even the government, the U.S. government, is never going to let loans default. In my opinion, that is not going to happen. So when we reach that compromise and we raise that debt ceiling, we have in fact increased our deficit. And that's got to be bullish on gold. So I really think that what we're seeing is a knee-jerk reaction in the market to that news. And for the last chart of the day, this is our daily chart, 1440. And this is where we've been keeping our Elliott wave count. My belief is that we're in wave 5. But what you can really see here is that this market right now is trading genuinely in this consolidation area. Support down at the 38% level. That's 38.94. Resistance at 41 or 40.94. You can see that it's traded within this particular range. what we are seeing, as I believe, is this consolidation within the market. My recommendation, of course, is going to be to maintain our position and to maintain our stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for another daily update and review of the week. Bye-bye.